Hello everyone, welcome back. Today we're going to start on a new module in personal financial planning. In this module, we're going to learn all the foundational tools that you need to become successful in your personal finance, and you'll be using the tools that we learn in this module in all future chapters. So let's get started. The first chapter we're going to go over today is budgeting and personal financial statements. In this chapter, you're going to learn how to create a statement of net worth, and we're going to go over each of these statements. The second statement is the cash flow statement. Both the statement of net worth and cash flow statements are looking back at where you are today or what you have accomplished in the past. Then we're going to develop and implement a personal budget, which is more forward-looking. Finally, we're going to connect all these activities with how you can reach your financial goal. Let's get started. Why do you need a financial statement? And the answer is we need to know where you are so that we can get to where you want to be. So the first step towards reaching your financial goal is to figure out where you are today. So where you are today means how much money do you have, what's your current income, what's your current expenditure. In addition to that, to reach your financial goal, you also need a roadmap so that you don't get lost along the way. And the budget is your roadmap. Financial planning is actually very simple, but it's not easy. The reason it's not easy is because a lot of times our own emotions are our worst enemies. So here are some common emotions that may make creating these financial statements appear to be difficult. Again, you will learn all the tools you need in this class to do it, but we need to do it. So a lot of people have some kind of fear regarding money matter. This may be because of what you get influenced from the media, or maybe your own personal history. And the fear can be due to growing up in poverty, or maybe because finance was a source of stress for your parents or grandparents, and you hear them fighting. Another reason that you may not be willing to look at your own finances is because of guilt, because you may have made some mistakes or spending decisions that were not the wisest. And the truth is that we are all human, so all of us make mistakes. Another reason is that we do not want to be told no by our numbers. So you don't want to feel that, okay, I cannot buy the thing that I want to buy, or I cannot go on a trip, or I cannot go out with friends because I already went out last night. Sometimes looking at these numbers can also feel overwhelmed, or the task seems too big. Tracking expenses, keeping track of your spending, and making adjustments to your budget, these may feel like not the most fun way to spend your time, and they may feel complicated. The truth is that once you set up the system, it does not take a whole lot of time, and you can get a lot of reward by becoming financially responsible. So how can you overcome these barriers? Well, you already taken the first step. You are watching this video, you're reading a textbook, and you are taking a class. So you already taken the first step. But how do you keep up the momentum? So to overcome fear and guilt, know that even if you don't look at your finances, the facts don't change. So keep in mind that knowledge is power. And without knowledge, it's difficult to make changes. So knowing where you are today is the first step. If you feel overwhelmed or you feel like you don't have time, remember that doing is easier than worrying. Because even if you don't do it, you're spending energy in your head worrying about finances. And stress can take up a lot of energy. So doing sometimes is easier. We already talked about that a little bit in chapter 1, where we say if the task feels too big or complex and overwhelming, break it into little steps. Do one thing at a time. And then you can celebrate the small wins. Also very important is to develop a support network. You're in this class, look around you. Your classmates are your best support network. You can talk to each other. You can help each other do the necessary steps or the necessary things. You're all doing the same homework. One of the advantages of this class is that the homework you're doing is actually going to help you create your own personal financial plan. So you're accomplishing the task that you need to do. Let's take a look at the different types of cash flows. This will help you manage your finances better by putting them into different categories. First, cash inflows. This is money coming to you. We want to distinguish cash flows that are recurring, regular. So these are cash flows that you can count on. For most of us, that is our income or our paycheck. I'm going to introduce the concept of gross income versus your take-home pay. This is going to be the term gross income and take-home pay. You encounter them over and over again. Take-home pay is your gross income minus all the deductions. So deduction may be taxes. Some of you may have health insurance premiums. You may have contribution to your retirement account. All those are deductions that are taken out, and your take-home pay is the actual paycheck that you get. These are money that you can count on to come to you every single pay period, whether it's every 2 months or every 2 weeks, or every week or every month. Versus irregular cash flows, these can include gifts, grants, scholarship, interest, dividends. So these are any cash flows that comes to you that you cannot count on to occur over and over again. As you can see, when you're looking ahead in the next part, when we do budgeting, these are income that you can count on. These are cash flow that you cannot count on. Next, let's look at cash flow that you are spending. So these are called cash outflows. Similarly, some cash outflows, these are expenses that recur on a regular basis. Some of these are essential expenses, and a lot of them are fixed. So such as your rent or mortgage payment, your loan payment, insurance, your education. So these are usually fixed, and they're essentials. You cannot simply stop paying your rent, for example. Some are slightly more flexible. They are still essential. These are food and grocery, gas, utilities. You can adjust your food budget to some extent. You still definitely need to eat, but maybe it's mac and cheese instead of steak for one night. The same thing with utilities. You may need to put on an extra sweater instead of cranking up the heat. But you have a slight, so the emphasis here is that slight flexibility. Versus other type of expenses, we call them optional or discretionary. So they are not essential. Examples are entertainment, streaming services, traveling, eating out. So these are things that you can go without, and it will not affect your lifestyle significantly or your well-being. Here's a graphical way to look at your cash inflow and your cash outflow. So your cash inflow has 2 main components. Your employment income, which is also, we call it the recurring. So these are income that you can count on. And then these are non-recurring income. Versus your cash outflow, if your cash inflow is greater than your cash outflow, so your cash outflow can include essential, these are the important expenses, and then there are also taxes. These are non-discretionary. You have to pay income tax. And then you have optional. These are discretionary expenses. You can have discretionary is planned saving. And then any extra becomes a surplus. So when your inflow is greater than your outflow, you end up with a cash surplus. On the other hand, when our cash inflow is less than our cash outflow, we'll end up with a deficit. A deficit is obviously a less desirable situation, because if you have a deficit, then you will have to make adjustment to your outflow so that you do not end up with a deficit. Next, we're going to look at the statement of cash flows, which is simply a way of organizing your cash inflow and your cash outflow in a format that is easy to use. There are a few rule of thumbs to remember when you are creating your statement of cash flows. The first step to create the statement of cash flow is to collect data. So you need to collect data on your income and your expenses. One rule of thumb is to use annual data, meaning to look at your income over an entire year and look at your expenses over an entire year so that you don't have to worry about seasonal variation or month-to-month changes. Where do you find this data? Income is relatively easy. You can look at your paychecks. Sometimes they are called earnings statements. Your employers provide those. Most of the today you can get them online. They will be digitally available to you. For your expenses, your bank or credit card statements, as well as if you use mobile payment, your mobile payment records. It is a little bit time consuming to do it the first time, but once you get used to it, you can do it once a year or once every quarter. The second step in creating the statement of cash flow after you collected your data is determine how many categories you want to have. So yes, where do you put each income and where do you put each expenses? So there's a trade-off to determine how many categories you want to have. The more category you have, the finer you can examine your spending habit, but the more categories you have, the harder it is to manage. So it's a trade-off between manageability and usability. So more fine-grained categories may give you more information, but they are more time-consuming to keep track of, so they may not be as manageable. The rule of thumb is to use 10 to 15 categories of outflow and 4 to 6 categories of inflows. And we'll look at some examples to that. However, it's very important to keep in mind that do not let best becomes the enemy of the good. So if 10 to 15 categories for you is too much, then just use 5 categories. Remember that doing it is more important than doing it perfectly. So if you can only manage 5 categories, that is better than not doing the cash flow at all. In the textbook, there were 2 sample cash flow categories. Again, these are samples. You want to adjust them to fit your own personal need. On the right-hand side is a more extensive or more detailed division of different types of cash flow. On the left-hand side is a more simplified version of how you can categorize your different expenses. The only right way to do this is the one that works for you. Let's take a look at a real-life example. This is the actual transaction that is downloaded from a credit card company. So what we would do is first download the statement, and then we'll assign categories to each transaction. So in this example, columns 1 to 4, so the transaction date, post date, description, and amount, these 4 columns are downloaded from the credit card company. And you decide how many categories you want. So in this example, these are the categories that the user has decided. So you have 1, 2, 3, 4, 5, 6, 7. So you only have 7 categories. The next step is to assign these categories to each transaction. So nature channels, they classify as leisure, so leisure entertainment. Grocery market, that's groceries. This is a gas station. So by looking at your past transactions, most of us will know where we go shopping and how we spend the money. So most of this is relatively easy to categorize. After you assign the category to an amount, you will compute subtotal. So we add up every item that is leisure. So in total, we spent $416.97 on leisure activities, $224.31 in grocery for this time period. You can use spreadsheet model to help simplify this. One of your personal financial plan statement is to learn to download transactions as well as to assign them to categories. So this is your personal financial plan assignment 3. You are asked to choose one credit card or one debit card that you use most often and download last year's transaction. Take a look at the transactions, determine the categories that you use to classify these transactions, and then compute the subtotal, and then rank the categories by the amount of spending. So your task is to submit a list of the categories ordered by the amount of spending that you did last year. Those of you who would like a challenge, then you got asked to compute the subtotal for each categories and also compute the percentage represented by each category. The percentage is the subtotal divided by the total spending. Once you have created these subtotals, you are ready to put them into a statement of cash flow. We're going to stop the video here. In the next video, I'm going to go over how to create that statement. See you soon.